Today, I'm going to take a look at why people lose money in the stock market. Why do people invest at the wrong times? Why do they enter into the stock market when it's a bad time? And why do they sit on the sidelines when it's actually the time to invest? So we'll take a look at that. Let's dive right in. One of the key things that you need to know is that the stock market is cyclical. So everything actually in the world is cyclical. Everything is cyclical and everything goes in waves. The wavelength or the wave pattern is common in nature. But in getting back to the cycles, you have the menstrual cycle, you have the age life cycle, you have the cycle of seasons, the year is a cycle, seasons, you have rotations, the cycle of the day. Everything operates in cycles. So the stock market is no different. The problem is many quote unquote investors, they're oblivious to the fact that the stock market operates in cycles. So what do I mean? The stock market isn't always, it's not always a good time to invest in the stock market. It's not always a good time to invest in the stock market. You can go on a 5-year period, 20-year period, 10-year period where stocks are not a buy, where other assets may be a buy. So we'll take a look at that. Here's a chart of the Dow. This goes back to, I think, about 1895. As you can see, the Dow Jones in 1895 was 40 at a 40 price level. 25 years later, in 1920, the Dow was only about 70. So you would have waited 25 years if you got into the Dow at 1985, and you would have received what's that, about a 65% return from 40 to 70, which is a horrible return. However, we'll look at another asset class. Here's the price of platinum, and I didn't get the price in 1895, but I think it was around the same price, about $15. So $15, 1985, 1920, 160. So you got a 10 bagger if you would have invested in platinum. So people weren't aware of the cycles. I guarantee you it was a lot of newspapers back then, 1895, hyping up stocks and advising people to get into the stock market. So it's cyclical, the stock market, just like fashion as well. You know, what type of jeans do you wear? Do you wear loose-fitting jeans, baggy jeans, or do you wear skinny jeans? Well, if you wore baggy jeans, or if you wore skinny jeans rather, 20 years ago, you would have looked weird. If you wear skinny jeans now or tighter fit jeans, that's in fashion. You know, if you wore baggy jeans 20 years ago, way to go. Wear baggy jeans now, they call them dad jeans. So fashion is in cycles too. And media is alluding to the fact now that the stock market isn't actually a buy cycle, when in all actuality, you should have been selling stocks 2018, 19, and you definitely should have been selling in 2020. So those are cycles. And actually, you know, I'm referring to the media. Media typically tells you the wrong or the incorrect thing to do. Oh, it's a lot of ads. So here's a Business Week article. You know, if you're somewhat familiar with investing, you know about this article. It was published 1979. It was called The Death of Equities, and it pretty much alluded to, I mean, if you look at the title, which most people do without reading, they assume that equities are dead. It's a horrible time to invest. Don't invest in the stock market, invest in something else. This is what the media was pushing. Guarantee you similar headlines were pretty much everywhere. This was, let's call that 1980. And what do you guess happened in the subsequent years of the stock market? Let's take a look. I'll remove the inflation adjusted. So you have 1980 here, 1979, 1980. You're looking at stock. This is, what's this? I think, yeah, this is a Dow Jones. Was at about 800. By 1990, it was 2,600, about a four bagger. 1999, you went to about 10,000. So you got a 10 bagger there when the media was telling you don't invest in stocks. Equities are dead. So that's the cover of Business Week. I showed you the Dow. Here's a book. This is actually a pretty good book on looking at group thought here. This is Victims of Group Think. Talks about a lot of wars, about a bunch of public propaganda that formed the minds of the masses. And speaking about the masses, most people, they don't have independent thought. Now, to form independent thought, to form your own ideas, you kind of have to have knowledge, different data sets, combine them together, and then form your own idea. So you have to seek out non-biased information from different periods of time to formulate your own idea. If you watch the news, if you're fed programming like the Business Week titles and such, you'll react based on that programming. This actually leads to this next article here, who reads books here. So you can see this is the percentage of U.S. adults who said they haven't read a book in any format in the past 12 months. And you would think that as technology expounds, more people, because it's additional formats. You got the audio books. I guess that's not really reading, maybe. And you got Kindle, the electronic books as well, iBooks or whatever Apple's service is called. But you can see here, less than 30,000, 37% of people haven't read a book in the past year. 30 to 75, which I guess may be a majority of the U.S., 26%, high school or less, 44%. So you see huge amounts of American citizens, they don't read. And without reading, you're not able to formulate your own ideas, your own thoughts. You have to go with groupthink or group thought, as we saw with the other book. That leads me to the next tab, which is the Ash. Here it is right here, conformity test. This was an experiment. I think it was in 1935. They got together and they asked people, okay, this is a target line. Which line here is most similar? You know, this is a target line. So you can clearly see that line C is the most similar to the target line. And when people were by themselves, 99% of people picked line C, or they picked the accurate line. However, when they had, I guess, Confederates that gave the wrong answer, and then they asked the person, and the Confederates, these were all people that were in on the fix, and they were basically pressuring the independent person to conform to their incorrect statement. So here are the findings. On average, 32% of participants who were placed in the situation, they went along and conformed with the incorrect majority. And this is 12 trials. I guess each person did 12 trials. 75% of the participants conformed at least one time. 25%, which is the minority, they never conformed. And this is with no peer pressure, less than 1%. You know, as I said, 99% of people got it right. And this is what they said. People, they decided to conform because they were out of fear for being ridiculed, or they thought that they would be strange, peculiar. So that's the environment that we're in now, or I guess the environment that exists always. Whereas if you go against that article, or if you go against the mainstream or your friends, you have to explain. And most people, they don't read, so they don't have enough knowledge to validify or add validity to add validity to their actual argument. So they end up conforming, which is astounding here. Here's another article, and this is the conformity that people follow. So Apple was downgraded by banks. This is 2013. Here, and I'll scroll down to some of the, this is a lot of ads. I'll scroll down to some of the banks. And keep in mind, Apple split. I think we'll look at Merrill Lynch. Apple split by 7. So you have to divide these price targets by 7. But Merrill Lynch maintained their 520, which we divide that about by 7. That's about 70. Credit Suisse here, they downgraded Apple from outperforming to neutral with a 525 price target. So that's about what, 70 and some change there. Keep in mind, as of 2020, and this is 2013, Apple is 380. So when you should have been buying Apple, the media, the masses, the manipulators, they were telling you that Apple was actually overvalued. And I owned Apple 2013, and Apple wasn't overvalued. Okay, so that's Apple. Also, we'll take a look at gold. And actually, I have to pull up the gold chart. Let me pull that up real fast. I'll pull up gold macro trends. We'll pull up this, and then I'll show you and it's outstanding. I mean, I can't even believe this stuff is legal, really. But we'll take a look at the past 5 years. So here's an article. Actually, I take screenshots in my iPhone of undervalued assets, commodities, securities, and years later, I like to look in, have a retrospective view to just be amazed and in disbelief at some of the prices, and I send them to my friends. But here you have it here. This was actually, what date was this? This was actually 2018. It was the end of 2018. I'll find it in the actual chart. But you can see gold was only $12.40 right now as of summer 2020. Gold is, let me move this over here. Gold is, what's the price? $18.12. So it's probably up about 50% give or take, right? And let's go to when it was $12.40. Here we have it. $12.40 here. It was the end of 1820 or 2018 because I took the screenshot. I remember. What did I say? 1820. Wow. But it was the end of 2018. Gold was $12.40. Gold was a buy, right? So you're looking at less than 2 years, 50% gain, and stock market with COVID is a dismal performance. But the article here, and I read the article, I don't have it up now, you can pull it up at your leisure. Gold rally will fade and prices could drop $100 an ounce, Wells Fargo. So they instilled an environment of fear when you should have been in an environment of greed. Like Warren Buffett says, I'm going to get this quote wrong, but he says, be fearful when others are greedy and be greedy when others are fearful. So Warren Buffett knows the logic and the underlying cause and reasoning to why investors lose money, because they actually need to do the opposite. It's another good book on this. It's called what is it called? It's called hold on, I have it now. It's called the Contrarian Investing. Oh, it's called The Most Simple Thing, or I'll put it in the I'll actually make it appear on the video, but it's called The Most Important Thing, I think it is. It's basically contrarian investing, whereas you're going against the crowd. In this case, the articles, the headlines, the mainstream media, they actually want you to go with the crowd, which, as you saw with the Ash experiment, it's the wrong move. So you actually want to be a contrarian, which I am, investor. And you can see here, gold went from $12.40, didn't go down 100, right? All the way up to, what did I say? $18.12 there. So you see the gold also. We'll take a look at Bitcoin. Sorry about that. So Bitcoin actually, and we'll take a look at Bitcoin and Ripple. Sorry about that. I mixed mania with Ripple, which was a mania. So Bitcoin mania, I remember this article was a Wall Street Journal. Even grandma And they didn't say grandmom, so they were targeting a younger type of investment. See, these are younger type of investor, quote unquote. So these are the things you have to look into. Even grandma wants in on the action. So this was, and look, they always tout the past gains. So the digital currency has gone from tech curiosity mainstream, leading its value to jump more than tenfold. So if you read this, you would naturally assume another tenfold. Also, key thing is FOMO is the fear of missing out. People see these articles, they hear their friends, they have a fear of missing out. They're like, "Oh man, I missed out. The world is over. I should have purchased Bitcoin." So let's see what happened in this article. What date was this? This is the end of a lot of stuff happens at the end of the year. This is the end of 2017. Here you have it. You would have purchased Bitcoin about here, 11,000. I'm gonna be honest with you. I've been investing 15 years. I almost capitulated. I actually started a coin share, I think it is, account. I flirted with the idea. I mean, I just was in disbelief. I knew that this was just a pure speculative gamble, but I'm watching it like go from 100, 300, I'm like, oh man, I had a fear of missing out as well. Even the best capitulate, but I almost capitulated. I didn't. I opened the account. I didn't invest any money, or not. I don't want to use the word invest. I didn't gamble any money, but Bitcoin proceeded to go to 19,000. So you almost got a double. I don't know what that is, about 80%. You were expecting it 10 times. I remember those headlines. They were saying Bitcoin 50,000, Bitcoin 100,000, Bitcoin 1,000,000. You can check out those articles. Then Bitcoin subsequently went on to go to a low. And most people would show here they wouldn't have the fortitude to stick with it there. But Bitcoin went on to go to 3,000. We'll look at Ripple. And we'll look at Ripple into 2017. Ripple was even worse. Bitcoin was the best case, or amongst the best case scenarios. So what I say, November 2017. So people probably purchase here, and people may have continued to purchase as it went up, digging an even deeper grave. Here you have here. I guarantee you a lot of people purchase on this day, right? Then subsequently, look at this. Goes down, down, down. Also, let me close some of these windows here. I'll close this one. Ellen, Bitcoin was on Ellen, mainstream media. They plaster these things. When you see the word Bitcoin, you'll either be a millionaire or you'll be totally broke. But that's a 50% chance, if you ask me. Be a millionaire totally broke. If you have 10,000, the either or is lose 10,000, gain 990,000. I mean, that's actually pretty good odds there. So we saw what happened, and this was February 2018. Then I'll close it up pretty soon. Warren Buffett, he said this was this year, February 2020. He said, don't buy or sell based on coronavirus fears. So I remember this day, stock market, I think maybe went down that day, 800 points or so. And they had Warren Buffett on, do I have the dial? I don't even have the dial chart up. But they had Warren Buffett on CNBC that day. Dow was at about 28,000. Dow would subsequently go on to go, I think over the next 30 to 45 days, went down to 18,000. So you would have saw Warren Buffett. Hey, that's Warren Buffett. He knows what he's talking about. And meanwhile, you should have been selling. You should have actually been sold, as I mentioned earlier. But that's Warren Buffett there. Oh, here's the Dow. I'll show you. So that was February 20. Let me go to the 5-year. It's actually a bad chart because it's too narrow. But Dow was actually, it was 28,000, and it will go on to go to this chart doesn't capture all the data. It will go on to go to 18,000 there, and I'll close it out with another Warren Buffett. So also another thing that they do, they try to make you go against the greats. Sometimes you should take their words of wisdom or actually more so follow their actions. But keep in mind, Warren Buffett, he can't sell stocks because he's not able to liquidate his positions that fast without causing a major panic in the stock market. So he actually wants you to maintain or hold your positions. But this was an article December 1999 during the height. They had an article, Barron's, and they said, "What's wrong, Warren?" And they questioned whether Warren was 69, or they questioned then he was 69. They tried to allude to his age as being inexperienced, when we know that the older, more mature, more knowledgeable investors, they actually more experienced, as you saw with the Wall Street Journal with the grandma title. They called him, look, an old man. So they try to basically say, okay, Warren, he doesn't know what he's doing. And if you would have, Warren, he stayed straight away from the tech stocks. He was investing in like the Allstates, the retail, pretty much like the blue chip type of investments there. And let's see. Oh yeah, here we are here. If you would have, here's Berkshire Hathaway since 1999. If you would have followed Warren Buffett, purchased what he purchased and stayed away from the tech stocks, you would have been up plus 35. If you would have had, I think this one is the NASDAQ here. Yeah, oh no, this is the S&P total return. NASDAQ was even worse. You lost 37%. So Warren Buffett was up 35. If you would have went the opposite, did the tech stocks, you would have been down negative 37 there. So let me know. What do you think? Why do investors lose money? Are you in a period now where you're losing money, or you're buying stocks now, or you're listening to the mainstream media? Have you seen any articles that tell you the opposite of what to do? Let me know in the comments. Thanks for watching. To subscribe for more financial content, please click the circular button where the red arrow is located, and also watch one of the top 2 videos up top.